Make him feel really welcome as we bring to stage Mr. Jamie McIntyre. Come on, guys, give him a hand.
Good morning. Everyone's over jet lagged by now. You're looking wide awake, refreshed, ready to learn some more. So as Joel said, today is a very big day. We have a lot of speakers that don't speak for very long. But in particular, we want to go through, you're going to hear from a building inspector, you're going to hear from a real estate agent, you're going to hear from insurance, property managers, a couple of suppliers are going to speak today, share why they believe in Phoenix, give us some examples of typical properties that exist in Phoenix, show you some pictures, and go into some more today. We're going to start drilling down into some more, microeconomic levels of why invest in Phoenix, why we've chosen this as one of the main cities to target, at least initially. So a lot to go through. This morning I'm just going to, I'll open up for some Q&A as well as you're going through stuff yesterday. Some of you, I noticed some questions that you have in the room. I'll clarify. Other questions you'll have, I would just suggest be patient. You've only been through the first day. So a lot of those questions are naturally going to be covered throughout the course of the week. Remember, it's a whole week. We create this program. It's always evolving. It's created to deliver the end result so you're able to get results. I mean, 21st century education, any topic that we do is all about how to give you as much information, but the most important information to get you be able to take action with the things that you want to do. Making sense? So what we want to look at, because I think we also have to, reframe ourselves at time and keep ourselves focused on how good the opportunity is. Because sometimes we get caught up in the micro details, we get a little bit stressed, or especially when we're jet lagged, that doesn't help. Or we miss the bigger picture. So I want to just clarify, if we look at, and the other question some of you have is about the lending. Okay, I want to clarify some of the things with that. But here's one thing I'm going to suggest, jot this word down. Now, this is a word you need no matter what strategy you do. You know it to be true in any endeavor. To be successful, I've found the most successful people in any endeavor, whether it's a Richard Branson in business, okay, whether it's a Donald Trump in property, whether it's anyone, and being a great mum, okay, or great dad, or whatever career it is, one of the things that help people outperform is the people that have this skill or have this ability. And jot this down. What you need to have is a thing called flexibility. Jot that down. I know for some of you to write down the word is difficult, okay? But flexibility is critical in anything we do. Why? Do we live in a world that stays the same all the time and doesn't change? Yes or no? No. We live in a world, especially now, maybe 50, 100 years ago, it didn't change a lot, but the world is rapidly evolving. So what may be available one month is not necessarily available the next month. So in anything we do, and even as you're learning now, as you continue to invest over the next 2, 3, 5, 10 years in the US, things are going to constantly change. Obviously, we'll give you market updates and keep you updated with our shift. If we say, in 2 years or in 18 months or whenever we say, look, Phoenix is not the number one market, there's other markets, we'll let you know about that and why we believe that. So those things will constantly change, okay? The biggest thing that with the US is what constantly changes the most is finance. Okay, so I want to cover some things there because some of you are a little bit concerned because some of you, especially some of you have access to a lot of money and already geared up where you can buy a lot of properties. There's others of you, and one of the reasons originally when I started 21st Century Property Direct, one of the mandates I gave to the team was the bottom line. What I found is there was many people, not everyone, some people already coming to seminars, some people already millionaires, others already started investing, but a lot of people had never bought their first property. So the goal was in Australia was to set up Property Direct to help people get their first 1 or 2 properties. Because I figured once they've got their first 1 or 2, they may not need our help as much because they've got started. The hardest, if you're building a property portfolio of 10 or 20 or 30 properties, whatever it is, the hardest ones are what? The first 1 or 2. That's the most difficult because it's like your training was, once you get your first 1 or 2, I won't say necessarily it gets easy, but it gets simple because you know what you're doing. And it gets simple to a point until you get up where the banks won't lend you any more money. Then it gets a little bit more, you have to get a little bit more resourceful. Remember we talked about that yesterday? And I think that was a good example yesterday with Nathan Tinkler, how resourceful he had to be to say, look, I want to buy a coal mine, and it's going to cost me $30 million, and I don't have $30 million, okay? And he had to be resourceful and creative and come up with a way to make it happen. And we relate that to some of you are now in a position where you want to be able to get at least one U.S. property. And you want it now, okay? You don't want to wait 3 months or a year, etc. But you want it now. But your finances or your cash available is limited. True? So then it can make you a little bit stressed. You're like, I really hope I can at least get one, okay? So of course, our goal is predominantly to, if that's what you want to do, help you get started, okay? And that was what we set up Property Direct for. Now, obviously with the US, what's exciting about that, it's a hell of a lot easier to help people get 1 or 2 properties in the US than it is in Australia right now. Is it true? If you've never touched Australian property, or even in New Zealand, the expense, let's say a typical Australian property right now, you might be looking at paying $500,000, is that true? Yeah. I think the average medium in most of the cities is between $450,000 and $565,000, with Sydney being the most expensive. So in Sydney, $500,000, is anyone from Sydney? Yep. In Sydney, a $500,000 home is not very nice, is it? Okay? No offense if you live in a $500,000 home, but it depends where you are. But you can buy, they showed, it was great last year. I don't know whether they had the article still now. You might have seen it on the front page of Fin Review. They were showing, it was US versus Australian property, front page Fin Review last year. And they were showing $1 million in Sydney, what you would get, versus what you get for that in America. And the difference, like, as I said yesterday, I gave that example of $900,000 for an absolute mansion. I wish I had taken some photos to show you this place. That used to be worth $3 or $4 million. And at $900,000, less, 8–10% now, $800,000 in Phoenix, and you can live like a king. $800,000 in Sydney, in an inner city suburb, you're going to be living in a, what do they call those things? Those terrace houses. And not even a nice one. True? You're not even going to look rich. You're going to be like, not that nice. So the comparison is massive. So if we look at just investing in Australia right now, let's say $500,000 for a house or a townhouse, how much would we have to put in cash? Generally, at least 20% these days. Is it true? You'd be lucky to get 10%. You generally just need 20%. So what are you talking, $100,000 in cash? How much stamp duty are you going to pay on a $500,000 property? Guess. Too much, yeah. The Kiwis are going, not much, okay? How much? 25,000? Now, can you borrow for 25,000? Well, they do creative financing for you. Will the government say, look, you've got to pay us 25 grand, but here we'll give you vendor finance, or just pay us off over time? No, you don't get that property until you pay that in cash up front. I mean, that's where it's hard. It's hard money because it's cash tied up, gives you nothing in return. I mean, who would like a stamp duty franchise? Raise your hand if you'd like a stamp duty franchise. What sort of equipment do you need? I need a stamp. Well, that's going to be a big outlay, and boom, okay, 25 grand every time. And that's a good business, and that's why state governments are addicted to it, okay? But it kills our property market. And now in Australia, here's what's going to happen in Australia. Australian properties only continue to grow because people believe it's going to continue to grow. Now that a lot of people starting to go, if I'm not going to get the capital growth, if my $500,000 property is not going to double in the next 10 years, and I have to be negative geared, and I have to pay stamp duty and all this interest, is it as exciting? And a lot of people going, I'm not so sure about buying, so less and less people will buy. And that's what's starting to happen. Even the top end, I've been saying to some of my friends, I am never going to, I should say never, but unlikely to buy a home in Australia that I'm going to live in again. Because I see no point. I've been encouraging a lot of my fairly wealthy friends, sell their homes and just go rent. Because one, cash up. I'm not saying you should necessarily do this, but I'm just saying cash up. And your home, you can go and rent a home or a mansion twice as nice for the same money you'd pay on a typical home in interest. Does that make sense? Because in Australia, we have this perception we have to own everything. It's almost an ego type thing. I remember having a conversation with Tony Robbins, I'm guessing 5 or 6 years ago. We were in Tahiti. And we were walking down the beach and he was talking about how he's selling a lot of his homes. He has like 4 or 5 homes. He had one on the Gold Coast. He lived part of the year there. Has a beautiful home in Sun Valley, Idaho, like one of the most amazing homes I've ever seen. And he lives in LA, etc. And we're having the same conversation. I said, you know what, I'm doing the same thing. You used to you go to another country and you go, oh, this place is amazing, okay? And you want to buy a home, okay? The reality is you might end up spending 1 week in that home a year. So I think thinking, let's have a simpler life. Why do we have to buy everything? Why can't you just go to the Swiss Alps and just rent a beautiful home 1 or 2 weeks a year when you're there and you have the flexibility? So unless it's an investment, why would you buy it? So my point even with houses now in Australia, unless it's an investment, unless that home I want to live in is going to go up a lot in value, why would I buy it? When I can go and rent a nicer home for half or a third. I remember living in Sydney quite a few years ago. I was leasing a absolute mansion. I don't know if you ever watched that Australia's Top Models, that show. That home I used to live in, they moved in as soon as I left Sydney to move to the Gold Coast. That home I was able to lease for $17,000 a month. To buy it would have cost me $70,000 a month in interest repayments and no capital growth. That place has not increased in value, like a $10, $12 million home. So why would you own something you pay $70,000 a month for, and how much stamp duty, how much maintenance, that's not necessarily going anywhere in price? There's 0 point of that. Who's following what I'm saying here? So now some people have the perception, I feel safe and secure if I own my own home. Well, once you pay it off, maybe you do. But if you have a mortgage, do you really own it? Or who are you renting it off? You're renting it off the bank. So this idea that I own it, it gives me security. You're still renting it, but you're renting it at twice the price generally than what you could rent it in the normal market. Making sense? Okay? So we've got to look at things in a little bit more fluid way. My point is here, let's say $25,000 stamp duty, 125 grand. So if my goal is to help people that haven't started property investing to get into at least 1 or 2 properties in Australia, I'm sure you can get cheaper properties in outer areas, but it's a tough ask. People have got to come up with a lot of money. Unless then you can get vendor finance and do some of the creative stuff we teach, it's a lot harder, okay? So here we are in the US though. Is it going to be a lot easier, even if you don't have as much money or cash right now? Now remember, don't just focus on what the cash you have now. You're learning these skill sets. If you have a set focus and you really want to do something, can you find a way to raise the money, yes or no? If you really commit it. You know when you're a kid and you want your first car or first bike, it's amazing how resourceful you get, how creative, how focused you get. You work harder, you do these things, and you make it happen because you have a clear goal. So anyone in this room, I don't care if you don't have any money, you're going to see properties and opportunities if you get resourceful. If you have to go back and save the money, you'll save it rapidly so you can participate in that opportunity. Making sense? You just got to do whatever it takes. Now, here's what we have had in the past. Now, in the US, it's very hard for you as Australians to go down to Wells Fargo or any bank and ask for a loan immediately. We went through that yesterday. Almost impossible. So what we had negotiated in the past was private investor money and what's called hard money. You want to jot that down, hard money, which generally just means it's private investor money and you'll pay, obviously, higher interest rates for it, okay? This is not easy to do and very rare and very difficult to do. And you'll find that most people that are trying to invest in the US, almost impossible to get, okay? Because it's a limited amount of funds and the terms and conditions change every month. Sometimes there's money available and sometimes it's not, okay? Initially, we had available at 75 LVR, 75% LVR. Then it was changed to 50%. Does it make sense? So even in the last 4 months, every tool that's been here, it's changed every time, okay? This time, as of a week ago, it was no longer available in the interim period. Does it make sense? At 50% LVR. So what we did was say, okay, well, obviously we're looking at other sources of that to get it back, okay? And I can't promise when that will happen, but we continue working on that. We've got some new suppliers that said they'll have that money facility available soon. They're working on that for us. So then what we said, okay, well, we've got to get resourceful. Some of you don't have all the cash to buy a property, okay? Or are saying, look, I might have the cash to buy 1 property, but I'd like to be able to buy 2, and I don't have the cash to buy 2. And I can get some lending. I was hoping to buy, twice as many. Who's following what I'm saying there? Okay? So then we said, okay, well, let's get resourceful. We only happened a week ago. How can we get extra lending? So obviously what we arranged, one solution was to fly Goro out, and Goro spoke to you yesterday, as an additional solution, which for many of you will work because you can borrow unsecured in Australia. And that's another way, and some of you are already doing that and going, yep, that's another way and get more property. Okay? It may not be the ideal solution, but when we're talking even in the US, with the facilities that are available, it's still hard money. Okay? The interest rates varied all the time, every month, depending on what they're going to offer and what's available. Does that make sense? But let's look at it. Here's the thing that I also arranged. In the previous tours, now it's different on every tour, generally the price of properties that they're able to get access to in Phoenix, jot this down, we're around the range of 70,000 up to about 110,000. Okay, that was a typical range of properties on some of the previous tours this year. Okay? When they had 50% LVR. So let's do the numbers. At 50% LVR, how much do you have to put in? Be 35,000 to how much? 55,000 in cash. Make sense? Okay. That's when the 50% LVR facility was available. Okay. So the other thing that I've had them arrange specifically in a short period of notice, which is not easy, you speak to suppliers, to get the challenge, if you've got good stock, it's the harder it is to get. Because if there's good stock of property, what happens with a lot of suppliers that are chasing good stock is they go very rapidly. You're going to hear from Tyler later today, and he'll tell you stories. Why he often say, look, I can't give you too much advance notice of stock that we have because, boom, it's gone. Okay, he showed us some properties that originally he was going to have available for you guys to look at selecting, to inspect, and we went and inspected some of them only 2 days ago. And I said, some of these are great. How much are they? And he told me the price. He said, but they're already sold. I was going to have these available for you guys, but they're already gone. And already tenanted. And they're doing the renovation while we're walking through the place, and they've already got a tenant waiting. So harder to get, but good because a lot more people are after them. Does it make sense? Okay. So for a short notice, say to suppliers. So here's what I said to them. I said, also what I want, because we can't get the lending at the moment that we used to be able to get, and we're working to get it back. What I want is stock that is lower price as well. So you'll still be able to access stock in the 70 to 110K range, but most of the stock that you're going to be able to access is, I think I mentioned yesterday, from 34,000 to about 70,000 range is most of. Does that make sense? So even if you can't get 50% LVR this week until we can get finance facilities back, your cash outlay is no more than what it was previously on the other tours for the properties that they had to access. Who's following what I'm saying here? Okay. Now, it's not a perfect world, but to be successful, what do we have to be? Resourceful and also flexible, because the world will change constantly. Now, obviously, we have to be resourceful as well, so how do we overcome that problem? Now, anyone that's been successful, they simply have a challenge comes up and they get resourceful and say, how do we get over that? Now, we can spit the dummy and go, well, that's not fair, and I want the world to be perfect, okay? But jot this down. Life isn't fair. So what do the kids tell us? Build a bridge and do what? Build a bridge and get over it. And let's just, the other saying here, deal with the cards that play with the cards you've been dealt with. So, and that's what we've got to be as preemptive investors, because things will always change. So we say, okay, well, this is what's happening. Let's accept the fact and let's see what can we do about it. Okay, and let's be flexible. Let's work on these things. Ultimately, how do we get an outcome? Okay, so that's a couple of solutions. Say, okay, resourcefulness. Let's look at other ways to get unsecured, effectively hard money in Australia. For some of you guys, that will work. For some of you, not for all of you. Fair enough? Other way is, how do we access properties in different areas and different price range so you don't need any more cash than what you would have needed in the last place? And that's what's also been arranged for you as well. Okay. Now, if some of you get stuck and have less cash than that, towards the end of the week, I will see what I can do to be able to, there is possibly some properties we might be able to even get less than that, okay? Around the 25K mark, but I don't want to promise that, okay, because it's not on the stock list, but if some of you say, Jamie, can you do something like that, I will speak to the suppliers, okay? But most of it's going to be in this sort of price range. Some will be up to as high as this, if you want to go that, okay? I bought some properties over the 100K mark. But mostly in sort of this or this price range. Okay? Now, obviously, the different price range depends. If it's a condo, it will generally be cheaper. If If it's a house, and you see some of these houses in a suburb, and nice houses, you'll be paying more. Okay? But there's still some nice houses that we looked at 2 days ago around the 70, 80K mark. And they're nice homes that would be 3, 4, 500,000 in Australia. So you'll be amazed by that. Does that make sense? Okay, it's not perfect, but it's the cards that we dealt with at this point. Now, of course, we'll keep you updated as we're working and the different finance facilities come available. We'll let you know, okay? And then you can take advantage of that for future properties. The other question some of you had around, Wells Fargo and things like that, just to clarify a few things, and I don't know whether to clarify this for you already, but let's just go through it again. With Wells Fargo, the reason you open your bank account up is to build build your institutional credit history with Wells Fargo. This is different to building a credit score or a FICO score that's known in the US. Do you know what I'm saying? So for those who don't understand it, you're not actually building a credit score or FICO score. You're actually building an institutional credit history with Wells Fargo. Reason we're getting you to do that and commence straight away with that is Wells Fargo is a relationship bank. If you start a relationship with them, then down the track, they're more likely to loan you money. Okay, now I talked about two to 3 years where they're more likely to refinance your US properties if you wish at US bank rates. Okay, now there's some US bank rates offered right now in America at 3.95%. Who likes the idea of that? Like, Jamie, why can't you get that stuff for us straight away? Okay, trust me, if I could, I would, okay? You got to be patient. But the actual Wells Fargo has said that, when I was saying 2 to 3 years, they said it's more likely we can't make promises, 18 to 24 months, okay? So that's the idea of having a bank. Now, there's other people who've been on previous tours that have been able to get American finance. Now, the reason being, some of them have lived in America in the past, of course, or others have been trading in the US with stocks and have had a US trading account for some years. So they've built already a credit relationship, and that's helped them be able to get finance. Make sense? So you're commencing a relationship. I'm assuming, who's here looking at this as a long-term strategy? Okay? Not just a couple of months. And so that's why that's critical to get that set up and filling out your paperwork, and you're going to see Wells Fargo tomorrow to finalize your accounts so you can commence that relationship. Now, here's what's happened. Also, Canada, the biggest investors are foreign investors in the American market right now is from which country? Canada, right? And then obviously UK and Australia is becoming, Australia's a lot more Australians coming, but predominantly it's been Canada. So the banks used to not lend to Canadians. But now, because so many Canadians are investing here, they've been building up their relationships. The banks have now, not all of them, but most of the banks actually now do lending facilities for Canadians. Making sense? Wells Fargo, if we were in Australia and invited 50 US investors to Australia, I'm not sure that we can get private bankers and high-level branch officers from one of the main branches of Wells Fargo to come down and have a chat to you. They're going to say they're too busy or what's in it for them. You understand this, Wells Fargo do not make money by having a bank account just open for you. There's no money in that unless you're going to put a lot of money into it. They don't make money from that. Their only vested interest to go to that trouble is to help to build a relationship so in the future they can lend you money. Does that make sense? That is their agenda. Is everyone okay with that agenda that they have? So they don't, you say, well, how likely is it that I'll be able to get finance in the future? We just say, well, are they just wasting their time, or do they believe there's a fair chance that's going to happen? Making sense? So they're willing to commit that time to do that because they see a longer term relationship. And also we've sold them on that, okay? That Australians are here long term and, open that relationship, and they'll definitely want, who would want to refinance in 18, 24 months at a much lower US interest rates if it was available? Yeah, most people. Okay, even if you'd bought a lot of them for cash and you got all these cash flows, because then you could refinance, pull out that money and go and buy more. Okay, or pull that money back to Australia and do whatever you want with it. Or pull that money out and do the share renting in the US if you wanted to. So you can mix it all up. Okay. The other question that some of you had, I noticed, was LLCs. Now, when you're buying property, you can simply put your personal name on the contract and simply change it later. Now, here's where we said some fundamentals in Australia in property correlate here, others don't. In Australia, you never buy, if you want to put your property in a trust and it's not set up yet, you wouldn't go and do the contracts, or you might initially, but you would never settle. And now in America, it's closing on a property. We call it settling on a property. You'd never settle on a property and say, oh, I'll just change it to my super fund later or my trust or company later. Does it make sense? Because you'd have to pay what? Stamp duty. In America, you don't have to. So the goal for you should be, how do I get it done as quickly as possible? If you don't have your LLC set up straight away, you can just put your own name on the contract you're buying, purchase contract. You can even close or settle on that property and simply change it later when your LLC is set up or whatever you want to do later. And it's not a problem. It costs, I don't know exactly what it costs, maybe $50 or something. Okay, so it's not a problem. So you have that flexibility, which is good. The other question is bank accounts. You know, do I open up, I don't have my LLC yet, so do I open up a bank account? You open up a personal bank account anyhow with Wells Fargo. Same thing that I did. I had to open up a personal. Once you have a personal bank account open, the relationship starts. And then it's easy to open up your other accounts later because you already have an account open. They've already seen your ID. It's already on file. So if you're back like I'm doing now in Australia and I need to open up more company accounts in the US, it's easily done. It's just an email to them. You have a relationship done. Where the first time, if you don't have that, it's incredibly difficult. Okay, so the value in getting all that stuff set up is a major outcome for you. Okay, LLCs, the other question that will come up, and it depends what you ask. You'll say, should I have an LLC? Everyone's with me with an LLC? Yep. An LLC set up for every individual property I buy. Who's been thinking that? Okay. Now, if you speak to some lawyers and their job is to sell LLCs, they'll probably say, well, you should have one for every separate company. Okay, that's up to you what you do. Here's my belief. I would not set up an LLC for every single property. Why? It's a lot of paperwork, a lot of bank accounts, a lot of hassle. You know, I'm comfortable. I have 10 in one. Okay, that's probably the most you want to do, but I'd be comfortable. I have no issues with saying, well, Jamie, if I had 5 in one, is that a problem? 10 in one, is that a problem? Because let's think about this. 10 US properties, if they're 50 grand each, is really only one, equivalent of one Australian property. So would you be comfortable having $500,000 worth of property in Australia in a single trust, yes or no? Of course you would. You'd probably be comfortable having a lot more in it than that. Okay, so in Australia, I will separate property assets in different trusts, but not one for each property. Okay, because all the time you have to do all your taxes and all that, it gets expensive. I will have, you know, sometimes have too much assets loaded in one trust, which is sometimes you shouldn't have too much loaded. You should space them out a bit more. But so it's really up to you. I'm not necessarily saying, but some of you had that question, but I'm saying for me, I have no issue, and I have no issue for you guys. If you said, okay, I'm going to have 5 in, build up 5 in one LLC, and then I might set up another LLC for the next 5 or something like that. Or you might say, I'm only going to do 2 or 3 in each one. That is ultimately up to you. Or you might want to be over compliant, etc., and have one for each one. But it's going to create a lot more paperwork, it's a lot more costs. I don't know whether they mentioned any costs about LLCs. One of the speakers today will be able to set up LLCs for you very rapidly, probably faster than anyone else, or actually a couple of them could. Warren can handle your Australian stuff, and he'd rather the guys in the US do your LLCs for you. Okay. Later, he'll do LLCs for people later if you want, but it's quicker to get them done here. There's no real money in LLCs for accountants. Some of the US ones will make a bit of money. The prices will vary. A lot of lawyer companies will charge about $800 for an LLC. So if you want to set up an LLC, that's what you'll be looking at. They'll be able to give you, I think they'll be able to give you paperwork today, and they'll pretty much have your LLC set up here before you go back home. Does that sound good? Okay. And you probably only need one to start with. Make sense? So it's no big deal. There's no huge expense. The other question some of you will have, about a dozen of you don't have self-managed super funds, but when Warren was speaking yesterday, he said you would like to have one to use for investing in US property. And then he talked about how you can't just go and buy a property, say, in your personal name and switch it to your super fund later, because that won't work from the Australian side of things. True? I will speak to Warren later today to clarify a few things as far as how quickly, some of you wanted to get a self-managed super fund underway while you're here, how quickly can he get the trust deeds done? So you can facilitate, because some of you might go, well, I've got some cash to buy one, but if I could set up a super fund and use some of my super money, I could buy a second or third property and get that sorted faster. So I'll clarify that with him. How quickly can that be done? Okay. So you can, if you want to buy one in your super fund, you can get that done as well. Now, those who already got it set up, it's not a problem. But those who hasn't and wants to consider doing one, yep. So I'll clarify more with him as well. And we'll probably get Warren back up before the week's out, any additional questions that you have. Did you find that useful yesterday with Warren, okay, with the Australian side of things? Today you're going to hear from US tax partners as well via webinar, just briefly. They'll just give their different perspective on it. You can use those guys if you want. We don't care who you use. We'll take a couple of questions now, and I have to go through some slides, would you believe? I'm not used to going through slides. I'm going to go through some slides quickly with you. And then we have a whole host of speakers for you. Okay, let's fire away questions. Let's just get it on the microphone. So I'm sure people at home will have similar questions.
2 quick questions. Just to clarify, if you are buying one property in your self-managed super fund and one personally through a proprietary limited in Australia and an LLC here, you're still better off having the 2 separate LLCs, obviously, to keep that separate. And secondly, with the LLCs, if you've got 10 in one LLC, you're assuming that, or you're betting that you're not going to get sued by a creditor or a tenant. You think that's pretty unlikely if you're putting them all in the one LLC.
You can, so you might say, I want to put in 5, but it's like, it's fairly unlikely, but it's still, you can say let's just have 1 in each one. I think it's just overdoing it, because, say 10 is like equivalent to 1 Australian property. I'm fairly comfortable with that. I'm not saying you should necessarily do that. You mightn't be as comfortable. So, but yeah, I don't have any issues with that. But for you guys, maybe 5 might be the max comfort zone in 1. Okay? Yep.
In relation to the personal finance option, if you're gearing through super, you can't lend to your super fund. So how does that actually solve the problem of now not being able to get hard money loans?
If you want to use your super money for buying property?
Like originally I was going to do 50-50, but now I can't. But the personal finance option doesn't solve the problem because you can't lend to your super fund.
But the personal loan would, if you just wanted to borrow money and use it to, without using your super fund and just buy through an LLC, you can use your personal loan for that.
Oh, okay.
So you could do, what's your name? Rachel. So Rachel's going to do that as far as maybe not a personal loan, but you're going to do a super fund for one property, and then if you want to do your LLC, another one, you could just do it not using your super money in just cash or whatever in a separate LLC.
Okay.
Yeah. So you can still use the personal loan if you wanted to do that to buy a property, and your super money, if you have enough money in your super, you can still set one of those up and use that to buy another property. Okay. But we'd have to hurry up the deeds, etc. You can still do that. It might just delay the closing of the property. Yeah.
The other point was my accountant in Sydney said if you can only have one property in an LLC through your super fund if you're gearing, according to the legislation.
Yeah, ask that question to Warren, okay? Or when Warren's back in, we'll get him to answer that question. Yep. He will know more the intricacies. Also, US tax partners will be via webinar later today. They're US and Australian accountants as well. So they may cover that as well. Otherwise, ask Warren. He'll be around here to Sunday. He leaves Sunday night. So grab him, or otherwise we'll get Warren at some time to do a Q&A on those things. Yep. There's a solution to every problem. Remember that. Oh, sorry, here. Yeah.
Hi, Jamie.
Oh, sorry, we'll just go here first. Yeah. Yep.
Hi, Jamie. Can you ask Warren, because I think a few people are in the room, you're talking about how rapidly they can set up the self-managed super fund.
Yep.
Can you ask about the family trust as well? Because I'm in that position and I'd just like to know how quickly I can get that done.
Can someone make notes of these and we'll pre-frame Warren some questions? So family trust, the lending, personal loans with super properties.
Sorry. So is the 70 to 110K the full price of the properties we're going to be looking at, or is it going to be much lower range than that?
This time?
Yes.
Yeah, so there is properties that will be in this range.
Yeah.
So, because what we want to, even when you go on the property tour, is give you different markets so you can see properties in this range, what quality they are, properties this range and properties this range. So they will have a lot of the properties this time, the lowest price points, around 30, condos around 34,000.
Is that the full price?
That's full price, yeah.
Okay, thank you.
And then up to 70, but there will be still some in this range as well. So you get to see, because some of you will have different tastes as well. Different, I guess, price ranges have different capital growth potentials as well, okay? And they'll go through all that and you'll get that look at those different things. Who else had a question? Yep.
for the American contracts to purchase, is it fine to be, say, Jamie McIntyre and or nominee? I'm familiar with Queensland law.
Yeah, how you would do it in
Nominee
Australia.
used to get used years ago, but then when they really jumped stamp duty, the nominee was an issue for double stamp duty.
Yeah, so
'Cause
in
there's no
Australia,
stamp
what
duty.
you're saying, like in Australia, sometimes I'll do this where you haven't got your trust or whatever set up, you're going to buy it, and you just put, Jamie McIntyre a nominee, or nominee, so you can change it before you settle. Make sense? You do that. You can do that before you settle. In the United States, you don't have to worry about that. You can if you want, but you can simply.
So that would be okay.
Yeah,
Yep.
you can simply change it because it's not.
And
it's
if
not
you
an
had,
issue.
say, 5 $100,000 properties in one LLC, and you had a debt instrument written that LLC owes $500,000 to a separate entity, if there was the lawsuit issue and insurance couldn't cover it, there isn't any issue that someone can come after the properties anyway because there wouldn't be anything there.
Yeah, run it by me again.
Okay.
Anyone else lost? Yeah, start again.
Instead of the separate LLCs for each property.
Yep.
So we say 5 properties in one LLC.
Yep.
$100,000 each for each property.
Yeah, so you get $500,000
or 10 at 50,
Yep, yep.
whatever. But a debt instrument is written to a separate entity for the purchase of those properties. In other words, the LLC owes the entire money to a separate entity to
On
have purchased
just-
those properties.
On all of them, or just say one of them, or whatever
Yes.
combination. Yep.
Yes. So that if there was a lawsuit and insurance didn't cover, the 20 million liability or whatever didn't cover, or the insurance company went broke, there wouldn't be, someone can't come after that LLC because it's not worth anything.
Oh,
So as a asset protection strategy.
as far you're saying, like what we would do in Australia, sometimes obviously if you have debt on property, that's one way to protect the property.
Yes.
And then what I would do in Australia, if some of you probably do this in Australia, where if it's a clever way to do it anyhow. But if you might have debt on the property, but then you'll take a second mortgage, or if you ever buy property in Australia in your own name, rarely, which I would do, but sometimes I will do. If it's in my own name, I might put debt on it. Then I'll have my trust take a second mortgage on it, so there's no equity in the property. So it's another form of asset protection.
Yeah, okay, yeah.
If you ever have to buy a property in your own name, that's one way to get the extra asset protection, because there's not as much protection in your own name. And sometimes in Australia, you want to buy a couple of properties in your own name for the negative gearing benefits. Do you want to refer that question to Demetrius or a few others later? Speak to them to get the exact answer. Okay, does that answer some of your questions? Okay, so let's go through now some micro level into the details, okay? And I'm sure they can be flexible for you. Just ask them that stuff. Just save these questions for the most value. The admin type questions, Joel, happy to answer your questions. If he doesn't know the answer, he'll get back to you. Fair enough? Yep. But also focus on still how you can. If you want a property bad enough and you don't have enough cash, still work and say, how can we make that possible? Yep.
Wait for the lenders to stop being tight with their money and then buy one over the internet.
Yeah, or possible the personal loan is one possible way. Or say, can you get more, you can buy some later. Or how can you get more cash, or just have to save up the cash. But wait till you see the different price ranges, because, and then you make up your own mind, okay? And then at the end of the trip, we may have them talk about some other cities, just as an additional thing. So just let them see it and then work it out from there. But yeah, there's no rush. But trust me, there's nothing wrong with condos at that price. You can get a good condo at that price, you'll get much higher rental returns. Okay, one more question.
Is there a trend in what's a popular kind of property, like in Australia, for example, in Cairns, people go for a certain type of house or a property. Is there a trend here as to what sort of property is most preferred?
Yeah, I'll let the suppliers ask them some of those questions as they'll go through the more examples of properties, and then on Sunday you get the showcase day where you actually see a lot of properties in detail and you can see all the stats on them, the rental yields with its different suburbs. And on the property tour day tomorrow, which you'll be going on, you'll get to see the different suburbs and the different areas of properties and what's most popular in different areas. So you get the different segments of a city. Let's go through some micro-level parts of Phoenix. Okay, let's look at some of the stats very quickly. I'll run through these quickly. But obviously, we were talking about yesterday the credit crisis and the rise of toxic mortgages that happened with the credit crisis. So obviously, a lot of toxic mortgages come onto the market, and that's what's created a lot of pain in the bigger cities. Obviously, we talked about the principal find the cities had the most pain, and I'll show you a graph on that. But we talked about yesterday the 3 cities that had the most pain in the US were Phoenix, Las Vegas, and Florida. They had massive pain, and that's where they can have a lot of bounce back, okay, because the prices went down so much, okay. You'll see some properties that were $250,000 that are now less than $100,000, and you'll be shown that as I go around, show your properties. A lot of them will say this at the top of the market was this price. This is what it is now, okay. Just different graphs showing how much the house prices have fallen, okay. Current homes in default, because more than 7 million homes in the US. Imagine that in Australia, there's only, I don't know the exact statistic, I think it's only about 8 million homes or something. We're talking a lot of homes that went into default, okay? And there's still more coming into default. What's happening in the US is some cities are still falling in price, other cities are growing again in price, other cities are flatlining, okay? As you'll see in one of these graphs here, approximately 300,000 new homes per month going into default in the US. Okay, they're still cleaning out the excess surplus. So here's what's going to happen in the US. And there's some interesting articles that come out in the Forbes magazine about this, which made me more bullish on the market. Is same as what's happening in Australia, but worst case here is because the banks stopped lending for houses. Construction companies and developers can't get funding. So the amount of new construction in the United States is only 25%. Jot that down. It's only 25%, a quarter of what it was. So they used to be building all these homes. Now they're only building a quarter of what they were because they can't get money. Plus, there's not as much demand for the property at the moment. So what you've got is, now, is the US population dying, stagnant, or growing? You can tell me. It's growing. It's still growing very rapidly. It's got a lot of population growth. So that's an important criteria to know. Now, then you break that down to certain states and certain cities that are growing. Some cities are shrinking. Okay, we don't really want to touch them. And other cities are growing rapidly. And there's other stabilised cities that we're going to look at maybe at the end of the trip. We'll have some due diligence on some more stabilised or very high rentals. At the moment, we're focused on the bounce back capital growth and rentals. Okay, and that's why Phoenix is a target for us. What was I up to just before then? Something really important I was about to share with you. Construction. So the point is it's down to 25%, right? And they've got to get the... so here's what's going to happen. As the population keeps growing, the surplus excess stock that there's been since the credit crisis is starting to be chewed up. They're making progress through it. It's not there yet, but at some point in the future, whether it's 18 months, 2 years, 3 years, whenever that happens, that surplus stock is used up. Then what do they have to do? They have to build new homes. And the construction industry is only at 25% of what it used to be. There's going to come this collision course that they need new homes, and the industry is going to take years to gear back up to be able to start building enough homes to keep up with the population growth. So what eventually will happen, once the surplus stock is chewed up, despite the economy, we'll look at those effects later, despite what the economy will do, where the population's growing, the surplus stock gets used up, then what starts to happen is that people have to buy new homes. So the new home price might be $300,000, right? So if a new home price is $300,000 to build, and you've bought a home, say $100,000, well below what it was at the peak, second-hand home, what will happen is that these second-hand homes will be driven up in price, not to $300,000, but somewhere close to it. Does it make sense? Because a new home is always going to be worth more. But it will be driven back up to jot this down, what we'll call replacement value. Does it make sense? Why? Because people are going to go, well, this is what they're paying for new homes. So a home that's a little bit older, not as new, is going to be worth that lesser discount. Making sense? But it's not going to be worth a $200,000 discount, is it? It might be worth a 10% discount. Making sense? Or in Australia, often you'll pay the same for a used home as you will for a brand new home. Make sense? So it'll drive these prices back up towards replacement value. It doesn't mean the homes will get back to what they were at the highs, but they'll move back to replacement values. What you're going to see, which will astound you tomorrow, is you'll see homes that are available that you can buy so far below what they can build them for. It's just ridiculous. You say, how can it be? Because you can buy homes well below replacement value. So in anything you invest in, even if you're buying in stocks, etc., if you can buy into an asset that's well below replacement value, when we talk about intrinsic value, in the stock market, you're really buying intrinsic value, because worst case is at some point in the future, that property should return to at least replacement value. Because long term, that's going to be the true indicator of what property is worth, is if people have to buy new houses and build them, if they have to pay that price, that will become the more real price in the market. So if you're getting them below that, that's a unique opportunity to do that. In the future, that's not always possible to do, because the opportunity may be gone in 2 years. This could be an 18, 24-month window of opportunity. Okay? And especially with our dollar, we'll talk about that later as well. I might cover that end of today. Make sense? So that's something to consider. Just a number of homes in foreclosure, just some stats to share with you of the situation, how many homes the banks have been continually clearing off their books, etc. Basically a lot. Let's look at some of the... so this graph highlights what we call a heat map, July 2010, of the foreclosures. So the darker areas, the darker states are currently, as of last year, where the most foreclosures have been occurring. Okay? And you can obviously see Arizona is one of those, Florida, Las Vegas, and there's a few others there as well that have had a lot of foreclosures. Making sense? Okay? Their states are having a lot of pain. Okay? Now, some people say, why don't you buy in California? Well, you can go and buy properties in California, but generally, will you be paying less than Phoenix or more? Well, there's some parts of America, I was in Miami and wanted to say maybe not be able to pick up a really cheap mansion, but the nice homes in the nice locations are still fairly pricey. Does that make sense? Because there's still money in America. So you're not going to get all homes that have dropped rock bottom prices. A lot of homes are still incredibly expensive. Okay, let's look at some of the micro... Now, some of this stuff I think Stephen went through with you in Australia, but let's just recap on it quickly. This is just showing here, now we're talking about Phoenix now, but you can see how it's peaked, okay, then it's dropped back down and starting to stabilise, okay. We believe the market, in a lot of cities now in America has stabilised. We say it's hard always to pick the bottom. There's a few cities that might still be declining, okay. Most of the market is starting, there was a massive crash in prices, but sort of getting along the bottom now. It seems to be stabilising. Then you're going to say, well, do you wait? Do you definitely have the bottom? And possibly it's too late because it's sprung back. Or do you start what we call, jot this down, dollar cost averaging? You do that on shares, right? So you might know exactly when the bottom of the market is, but you might buy one now, you might buy another one here, and over the next 12 months, you've dollar cost average out because of the prices were slightly less than 6 months, where you got a benefit there, slightly more in 12 months, well, it sort of average itself out, okay? But you don't necessarily want to wait 12 months because you hope to get it cheaper when you could end up paying a lot more because you've missed the bottom of the market. Making sense? That's what you do in the share market, you dollar cost average. I'll talk about that also in the context of the Forex rate with the Australian dollar, how we're going to protect ourselves or maximise the returns from that. Just an article on, some of you may have seen some of these articles in Australia. They talk about a lot that Australia and New Zealand house prices are now the most expensive markets in the world, okay? Where some of the best, most affordable property markets in the world now are where? America, okay? So things have changed a lot, okay? But yes, certainly Australia and New Zealand, for average people to be able to buy a home now is almost becoming unrealistic. We're here. We talked about yesterday, for young people, it's great. They can get a cheap home. Phoenix, Arizona. Let's look at some more details. That's a map you would have got yesterday, is that true? So tomorrow you're going to get very used to where the suburbs are. Ironically, a lot of you will end up knowing more about Phoenix and more stats on Phoenix than you do about some of the cities in Australia you've invested in, or New Zealand, true? Some of you invest in cities in Australia or New Zealand and haven't bothered to check any of the stats. You know, you've drove around there before and you're just comfortable. You're going to know more about this city, more research, more due diligence than what you would normally do investing in Australia. One of the questions I had when I first come to Phoenix, I was first here in 1994, but when I come back recently, was, you know, why is it such a growing population? What do people do for a living? What industries are here? Because as an investor, you want to have a sense of certainty that this city is not going to become a Detroit, okay? It actually has a future. It's actually going somewhere, so we need to know what's behind it and why is it a targeted city for us at this point. So the forecast for the next 10 years is 1.23 million new residents. I think I shared a stat yesterday. It's expected the greater area of Phoenix is Phoenix, and then the greater area being all additional cities or suburbs around it. Has a population around 5.5 million, growing, predicted to 8.8 million by the year 2040. Okay? They're predicting that Phoenix will become the third largest city in America by 2040. Okay, so it's a very sizable city now, the greater area of Phoenix, and it certainly has a lot of growth potential. 649,000 new jobs since the bottom of the recession. And you can see there that's broken down retail jobs, office jobs, industrial jobs. And we'll look a little bit more as far as industries. So that increase for the next 10 years, for instance, will require 456,000 new homes as an estimate to be built. So that will drive the construction and will drive back eventually to replacement value. Making sense? As they have to build those homes, that will drive the price back to replacement value or just below it. Commercial space they will need, office space, industrial space. Are we able to make these notes available for their, saves them having to write them down? Just these ones this morning? Yep, do that as a handout. That'll make it easier for you guys. Yeah. Yep. The GMP, as opposed to GDP being the gross domestic product of a country, grew to 187 billion in 2008. So this is fascinating. So the GMP, like if it was a country, okay, of the greater area of Phoenix is $187 billion. So that's pretty impressive. It's bigger than Malaysia or Argentina's GDP, gross domestic product, bigger than their entire economies. Does it make sense? So we're not talking some dinky little broken hill in Australia. We're talking a sizable economy. I mean, America is still a, you know, we say America's in decline. You know, Rome didn't crash overnight, by the way. So even though the decline of America, it could take 10, 20, 30, 40 years, the rest of our lifetime, before you see a full decline of America. It doesn't necessarily crash overnight. There's a lot of wealth in America. It's a big economy. Even the rise of China, everyone talks about China, and it's now the second biggest economy on the planet. It's still only about 1/15 the size of America. So really, it's nowhere near the powerhouse of America yet. Nowhere near. It's like a baby still. A very rapidly growing, strong baby. But it is, remember, let's keep things in comparison. America is huge. Some of their states are bigger than countries, okay? California, is a bigger economy than Australia, okay? So here, that's Phoenix. So what we were able, when we were here in general, we had the mayor come and speak to us. He come in and addressed all the members, etc. So could you imagine if we had 50 US investors taken to Australia, to Melbourne or Sydney, and the mayor would bother popping in to say hi and have a chat, And remember, this city has a greater population than those cities. So, they obviously, they are proactive over here. They appreciate business. They want to grow. I mean, Australians could learn a lot from Australian councils from what they do over here. They want business. They work with business. That's why they grow more as a city. They're very proactive. They're very business orientated. That's one thing, you mightn't like a lot of things about America. One thing is that they are very proactive in business areas, very enthusiastic, and that's why they've built a very large country in the last 50-odd years. Population grew by over 100,000 per year during the past decade, faster than any other US metro area, so it's been pretty rampant population growth. Unemployment rate in Phoenix is consistently less than the national average. That's important, okay? I hate to see the stats on Detroit or Buffalo, okay? Phoenix Sky Harbor International Airport, you all would have paid that a visit. That is a huge airport, okay? It has a big impact on the area here, brings in a lot of revenue from the airport. National and regional headquarters for many of the large companies in the top 500. So a lot of the big companies have a base here. So you'll see when you drive around tomorrow, there's a lot of big companies here. There's a lot of jobs. There's a lot of industries. What are some of these industries? We'll go through in a second. Some other details there. We went to they took us to the Mayor's Suite last time we were here, to the NBA. Who's been to an NBA match? Okay. I'm not sure if there's any on at the moment, but it's worth going to. And they have the NFL. It's not at the moment either. I think they're having a strike or something. But actually one of the Australian guys, I forget his name now, we had met some of the NFL players from Arizona Cardinals are at the NBA. And they knew we were Australian. They're going, yeah, it was great talking to you, because one of the Australian guys, I forget his name now, plays for Arizona Cardinals. Some of you might know his name. He's one of their best players. Makes an absolute fortune. So Phoenix, if you've been downtown tomorrow, you get to see it. It's actually, the other thing about a city, even though there's violence and crime in every city, we think our cities are perfect. Some of you come from underbelly regions, is that every city has crime. But Phoenix, you can walk around downtown Phoenix, it's a safe city. In comparison to a lot of cities in America, you wouldn't get out of your Humvee, okay? But you'll see downtown Phoenix is quite a nice city, okay? It's not like you have to be scared. You can't say that about every city. There's certainly crime in different parts of Phoenix, like there is in every city, but there's other cities with serious crime problems. It's very big, as you know. It's a college city as well. Arizona College. A lot of Australians have gone to college over here. Some of our members are here in previous tours that grew up, or didn't grow up, but went to college in Phoenix. So it's a very big college city that brings a lot of revenue into the city, medical schools, etc. So that's one of its industries. Strong in IT and aerospace. The Apache helicopters, they build them here, those Apache attack helicopters. Large semiconductor plants, so companies like Intel, etc., they're all here on a major way. One of the reasons also is because of the climate. Okay, it's very good for IT. It's dry, lots of sun, so it's good for that. So some of the biggest industries is the IT. So it's fairly diverse industry base. I'll show you a graph in just a second. Good question. I'm not really sure. Yeah, someone could probably Google it. But if they got bought out, I'm sure they're still based here, whoever bought them out. Medical is a big industry as well. Okay. I also talked about yesterday, it's an alternate to Florida. A lot of people don't want to semi-retire or holiday in Florida because it's too hot for them, humid. People that don't like that, they come to Phoenix. So Canadians come here for winter. A lot of people come here. A lot of people intend retiring here. So that's the other growth area. As the baby boomers retire, Phoenix is popular for that. You'll be surprised. You say, why would people want to live in the desert? Robert Kiyosaki lives here. I can't remember, but there's a lot of celebrities as well that live in Phoenix part of the year. It's quite popular. And also, as you notice, they have a few golf courses. Okay, that's a huge industry on its own. So I'll show you a graph in a moment. You'll be able to get all these notes, so let's just go through them quickly. But a lot of the big hospitals, medical centres, solar industry, you can see why. Not a bad city for solar. more IT companies, etc. I just want to show you this graph. So you can see you'll see it has a diverse, yeah, that's an important graph. So what you can see there, it has diverse industry. So it's not like a city that's built on a mining boom, as an example, that dies, the city's in trouble. It has diverse base. I mean, most cities that get to a large size have to have that. So it has a future. Now, why is that all important? Because if you're buying here long term, you want to know the city obviously has a future. You want to know unemployment's there, it's safer. A lot of industries, not just dependent on one industry, like the Detroit, and the car industry goes under, then Detroit's in trouble. Making sense? Okay, so it's diverse. Those things are all important to know. That's just part of your due diligence, getting to know a city from the microeconomic level. Tomorrow you get to know the city by physically going to the different suburbs, seeing the different types of houses in different suburbs. You'll start to feel more aware. You just be more comfortable with the city because you start to know what it's about. I'll take questions in a moment. Okay, makes sense? Couple of questions, fire away, and then we have, are the other speakers ready yet, or are we going to have a quick break? Fire away.
That government pie, as the government slice, is that investment in infrastructure? Is that what that represents, really?
What's that, sorry?
Is that in their investment in infrastructure?
It's giving a percentage of
GMP?
Of where the different industries that are involved as far as their makeup, of the percentage they would contribute to the GMP.
Yeah.
Yeah.
So that would be via roads and sewer and stormwater and infrastructure, mainly? I'm just trying to think how it would contribute to the GMP.
Yeah, GMP is like, it's the same as like for a country, your GDP is your turnover, your export, what you produce. If you're a business, and your business is a great area of Phoenix, your business, your revenue, your turnover is $187 billion. Okay, the size of Malaysia economy or size of Argentina. That's what a GMP is. So it's the same as a GDP, but it's for an area or a city. Makes sense? So what we're showing there is the different industries, the different sectors that make up a percentage of that overall city of turnover economy. Making sense? Okay. Here's what how long have we got? Okay, turn to the person next to you. Teach them everything you now know about Phoenix. Go for it quickly. And we've got another speakers coming up very shortly.